This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, July 18th, 2016. Euro dollar. So the euro overall remains under pressure since topping out recently at 111.87, with a focus now on a test of next recent support, which comes in at 109.12, that low from the 24th of June. A break below there will expose 108.23 further down. At this point, only back above 111.87 will take the immediate pressure off the downside. Sterling dollar. So we're seeing a bit of a correction potentially in cable after the market put in a bullish reversal week, ending a sequence of consecutive weekly lower tops. But at this point, overall, the downside pressure remains intact, and any rallies are now seen very well capped up towards the 135 to 138 area, ahead of what could be the next major downside extension towards 125. Bear in mind that recently, a couple of weeks back, the market put in fresh multi-year lows plus 30-year lows, which came in just under 128. Dollar yen. So dollar yen has been trending lower over the past several months, and the market could be looking to put in another lower top below 106.81 ahead of the next major downside extension back towards the recent multi-month and 2016 lows at 98.99. But if we see a close back above 106.81, this will do a good job of negating or taking the immediate pressure off the downside and potentially opening a more significant move to the top side. But for now, while the market holds below 106.81 on a daily close basis, the pressure remains on the downside. Euro Swiss. So Euro Swiss has been chopping around mostly, and though we saw several days back a breakdown towards 106.23, overall the market remains very well supported on dips towards 108, with the potential for another base ahead of the next upside extension back towards the range highs in the 111.30 to 112 area. Really only a close back below 108 would compromise this outlook. Aussie dollar. So Aussie has recently rallied up to 76.77, but the market looks like it wants to stall out again, really showing an inability to establish above 76.50 on a close basis. Look for a breakdown over the coming sessions that takes us back towards a bearish resumption down towards the recent medium-term support at 71.45. If we do see a close back above 76.50, however, and a break back above 76.77, this could open the door for a renewed upside extension towards a retest of the 2016 peak at 78.35. Dollar CAD. So despite recent setbacks in dollar CAD, overall the market looks to be putting in a major base. This will be confirmed on a break above 131.89, which is critical resistance, that high that we saw back on the 24th of May. A break above 31.89 will open the door for the next major upside extension towards the 135 to 140 area. Really only back below 26.55 would compromise this basing outlook for dollar CAD. Kiwi dollar. So Kiwi is under pressure after recently trading up to 73.25, 2016 highs, with the market now taking out some key short-term support at 70.80. This opens the door for the next test of 69.63 further down, which exposes 66.75, which is some key medium-term support. At this point, only back above 73.25 would compromise this newly adopted bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 last week put in a fresh record high at 2175, but the market continues to show signs of exhaustion above 2100 despite these record highs. Look for a break and close back below recent support, which comes in around 2150, to strengthen this outlook and accelerate declines potentially back towards 2100. Ultimately, though, we would need to see a break all the way back down below 2073 to really reverse the current trend, the current uptrend, and suggest that the market is putting in a major top ahead of fresh renewed downside. Gold. So gold has saw a setback in recent trade, with the market putting in a reversal week last week. However, the market should be very well supported down towards some previous resistance, now turned support at 1304, with a higher low sought up ahead of the next upside extension back towards a measured move objective, which comes in at 1400. Only a close back below 1250 will compromise the constructive outlook for gold.